welcome to Business Talk here on businesstech.coza. And today we're talking capital markets. And we've got a very special guest, Kevin Brady, the CEO of A2X, which is the country's emerging secondary exchange. And A2X has really been making waves in the market recently, attracting numerous new company listings and challenging the incumbent JSE. Kevin, welcome. Always good to chat.
Thank you, Michael. Thanks for having me on the show.
Now, if you look at the numbers, volume, value traded, all of them heading in the right direction. A2X has experienced phenomenal growth in what is a very depressed overall capital market environment. So we've got more than half of the JSE's top 40 now listed on your platform. How do you explain this surge in popularity, and what advantages does A2X offer over the incumbent?
So, first of all, you're right. It's not the most conducive environment. But I guess when things are tough, people also do look for savings and where they can get best execution. So, I guess there's also this force to look where you can get a better outcome, and A2X provides that. So we've been fortunate in the sense that, yes, we've had a very good start to the year. To give you a sense, in January, I think we did about 3.8 billion of value, and in June, it was up to about 11 billion, just over 11 billion, in fact. So you can see the growth rate that we've experienced. Now, I think that's probably driven by three key things. The first one being we've obviously expanded the number of listings on A2X. Literally, we were about 90 securities by the end of 2022. In the first 6 months, we've added in the order of 76 securities to A2X with a combined market cap of about over 3 trillion. So just having more product on your market makes the economics better for people to approach us. Also importantly, we secured a solution around some post-trade interoperability issues we're facing. That has now been put to bed. And when I say that, that's an industry thing. When you've got more than one exchanges, you want to trade across markets, but you want to issue one contract note to your client, there needs to be an element of post-trade interoperability. We were facing some headwinds on that side in terms of, getting a broader market agreement, but thanks to FISCA and industry, we managed to secure that. And then the last thing I would say is that the brokers that we have as members, we've got 5 of the top 6, started ramping up volumes. 2 of them were kind of running on low volumes, and as they bedded down their systems and became fully operationalized, that kicked up our activity levels. So, yeah, those are probably the 3 things: more product, an easier, simpler, and cheap way around interoperability, and brokers ramping up. So, yeah, that's definitely given us some nice tailwinds.
Whenever I chat to the brokers on my show, the one thing when I ask them about A2X is they always mention the low fee structure, the narrower spreads, and increased liquidity. So all of that providing real good cost savings for them, and they're enthusiastic. Initially, I'm not going to lie, there was a lot of skepticism. You're taking on this big behemoth monopoly, and there were doubters, and it is, the proof is in the pudding. You're proving the doubters wrong. You've got the potential here to transform into a primary exchange and really compete directly with the JSE. What are your plans and aspirations in this regard?
So, look, you're right. By using the latest technology and business practices and pricing structures, we've been able to attract new and exclusive liquidity to A2X, which is good for the brokers. And you're quite right. We narrow spreads and we brought additional liquidity. And that means it's easier for people to execute, to buy and sell. They can get more stock, better price. And as you said, our exchange fees are materially lower. So I think as a first step, while we've made huge progress, we really want to bed this down, and we probably want to double our market share in the next 12 months. So our initial focus is to add more companies, bring on the remaining brokers that aren't actually members of A2X, and bring innovative trade types that help us unlock dormant liquidity. So we're really trying to push in the current space, but you're quite right. If we push out a few years, we are looking at primary listings. I think at the moment we need regulation to well, at the moment, what's happening, regulators are looking to introduce a new set of regulation, which is more aligned with international best practice. It's probably one of our biggest headwinds to date. But once that's in place and they allow things like the transfer of listings, that definitely will be a trigger for A2X to look at that space. And I think there's two things. You want to attract existing listings and move them across, but then you want to grow the overall market by bringing in, the newer companies onto A2X.
Yeah, and I still believe firmly if we see a change, let's just take mining, for example, in the regulatory environment around junior exploration and the MPRDA, we start putting some of those things to bed and make it more attractive to raise new capital for exploration companies. Who's to say we couldn't compete with the likes of your AIMS and TSX and really reinvigorate what is a moribund market? So exciting to see the potential. When it comes to attracting a major company to list on your platform, how do you convince these companies to choose A2X over the JSE? What benefits do they gain from a secondary listing?
So, that's a very good question because the companies in South Africa have only ever known one exchange. The first thing is accessing decision makers, and then it's an education process in terms of why would you have an additional listing? Now, really, I think what has got us there is a strong value proposition. In short, for a company that already has, a public company that has a listing in South Africa, there's no cost, there's no risk, there's no additional paperwork or hassle. There's actually nothing that they need to do. They need to make sure they remain in good standing with their primary exchange, and provided they're in good standing there, they're in good standing with us and their shares are available for trade. Now, that is very much the international model. Then we pitch to them the benefits to say, well, look, what we do is through our pricing structure and obviously reduce friction costs, we can attract new liquidity to your shares, but not just liquidity in your shares at the top of the order book. So when you go to find the national best bid and offer, most of the time you'll find it on A2X. And so that's the type of liquidity we're attracting. And not only attracting a little bit, we're attracting it on average somewhere between 2 and 5 times greater than what you'd find on the incumbents. So you can get a better price, you can get more liquidity, and obviously your brokers ultimately are saving on the costs. And I often explain that you're going overseas and it's good to see the rand a bit stronger this morning. You've got to buy $1,000. There's only one bank in town. They say to you, well, the price is 17.50 to 18 rand. Every dollar you buy costs you 18 rand. New bank opens, lower cost, digital. Their price might be 1770 to 1780, right?
Yeah.
That 20 cents when you go buy stays in your pocket. That's the same on the market. That's what happens to shareholders. And then the admin fee is half the price. So yes, that's the pitch. It does take time, but I think where we're fortunate, we've hit a point of momentum. So as you mentioned, going into this year, we have 19 of the top 40. We've now got 28. So I think we've got 5 of the 6 top brokers. We've got most asset managers trading on us. As I say, we've got over half the big companies on board. And so you find this like building momentum and understanding. And I think the value proposition, along with the momentum, has helped us accelerate things.
Yeah, it's that snowball effect. And I think very much your success hinges on the support and participation of brokers and financial service providers. How are you engaging with them, encouraging them to redirect business to A2X?
So, look, the first thing is, particularly with the brokers, right, one of the challenges we faced is their infrastructure. Their infrastructure was set up for one market. So I was working with the brokers to say, look, yes, you need to invest, but once you've invested, and you will recuperate the costs through the lower fees and the benefits you can bring. And so as we've managed to get brokers through that investment cycle, it's not so much encouraging them, it's just saying, do the best thing that you can do for your client. So if your client wants to buy 1,000 Sasol and there's a better price on A2X, buy it there. If it's not there, don't buy it there. So we're very, very conscious saying, do the best for your client. And that, as a result, obviously, given the way we attract liquidity, the way we price, has resulted in that sharp growth in activity on A2X.
Yeah, and I guess, ultimately, the proof of the pudding will be on exactly what we spoke about earlier, the fact that you are seeing those narrower spreads and the enhanced liquidity. And in a market such as ours, very quickly, the value proposition becomes fairly obvious. I think the brokers will realize those advantages. But I mean, what you're really trying to do, and I recall chatting to you when you first launched, was really you all about creating a thriving and balanced ecosystem here. And that's one that benefits not only large companies, but also retail investors, the likes of myself. If I want to go out and maybe take a punt on ArcelorMittal after it was sold off yesterday, how do you envision A2X's role in empowering retail investors and facilitating their participation in the market?
So, look, I mean, maybe start off the big picture is like, I haven't come across an industry yet where competition doesn't benefit the end user. And because we've had a long-standing monopoly, there's no doubt they make us better, we make them better. And ultimately, the greater the efficiencies, you can help grow the market. And so it's really that role of saying, this is not really about taking 100 and eating 20% of it. This is taking 100 and saying, let's make the 100, 130. And that's how we see our role. And I think just generally, if you can reduce costs, make things simpler, respond to market needs, whether it's retail or institutional, you have a growing market. And that's our opportunity.
It's a massive opportunity in a market, as I said earlier. Yes, it's been pretty depressed. There's a lot of malaise, but I still think for an incumbent to come in or for a newcomer to come in and look at the incumbent and say, listen, there are inefficiencies here and we can still grow. I think there's a massive opportunity there. You mentioned regulation, though, and you have faced challenges navigating regulation that was really designed for a monopoly type system. What changes would you like to see in the regulatory landscape specifically to foster something that's more competitive and more seamless in terms of migration of listings and that kind of thing that would ultimately benefit the broader ecosystem?
Yeah. So look, I guess, if you asked us what our biggest challenge has been, it actually has been outdated regulation. Despite South Africa having an advanced capital market, deep saving pools, and I mean, we've definitely punched above our weight. We haven't advanced regulation to align with best international practice. So, what would happen if we were sitting somewhere else? Well, the first thing is that they have, in Europe, they have MiFID, in Australia, they have integrity rules. But in short, what it means is that if there's a public company listed in that jurisdiction, as a newcomer, I wouldn't need to go and get their permission. I could automatically list them. So on day one, I could list the whole universe of stocks for trade. So that would be huge. So to have an MTF model in South Africa would be absolutely enormous for us and would help us advance where we are quite quickly. The second thing is they never envisaged a market where you would have multiple listings and that you would need to interoperate at a post-trade level where you buy across two markets. Obviously, in Europe or the US, you buy across many markets. But you need to obviously clear that trade and settle it, and your client wants one note. Nothing was envisaged around that. We've had to kind of fight that battle, and look, we're in a much better place now, but that would also help. And then thirdly, best execution. We don't have any overarching regulation that says a broker has to do the best they can for their client. There's no push to say from a regulation perspective, you only have to trade in one market. Where in essence, you should be, as a broker, you should be saying, okay, I want to get the best price from my client. And if the best price is on that market or the best liquidity is in that market, I should go there. If you can't do that, you're not getting that end result for your client. So if I had to say three key things, MTF, post-trade interoperability, best execution rules, and as you mentioned, I guess the fourth thing would be the ability to transfer listings across exchanges. That would revolutionize the South African market.
And how close, I'm sure you're advocating for this with the regulators, how close do you think we are to seeing these changes being implemented? Because they seem to be very common sense regulatory changes that shouldn't encounter much in the way of resistance from the regulator.
So look, I think it's a big piece of regulation that the regulator's working on, and I think they've obviously gone through a lot of change over the years. Yeah. We do engage with them a lot, and all credit to the new team there. They've advanced it quite quickly. We are looking to see things like best execution and interoperability and market conduct, a draft regulation out actually before the end of the year. So that's positive. In terms of the biggest stuff, like they call it MTF or admitted trade model. That is only likely in 2 or 3 years' time. That needs to go through Parliament. So I think we are going to see big steps in the next 12 months. And then, kind of finalizing or closing the loop a year or two down the line.
Very interesting. I mean,
probably 2 years. Yeah.
just take best execution, for example. I think most people would think automatically that things like treating customers fairly and whatever means that you should be looking for the best trade, but it isn't encoded or codified into regulation. So I'm really looking forward to that. Just as we conclude, what's your outlook for A2X in the near future? Any exciting developments or plans that you can share with the audience?
Look, I think for now, it really is about expanding the universe of stocks. We'd also like to attract more unique stocks or products, through an inward listing model into South Africa, so people have different stuff to look at. It's about rolling out new trade types that help unlock, latent and dormant liquidity. Basically building up the level of trade activity on A2X. So, that's our immediate focus. I think, look out for new products, exciting order types, and more brokers coming on. That would be pretty much where our focus is for the next, 12 months.
Well, thank you, Kevin. Great insights, and I think proving all of the doubters wrong as A2X continues its journey to become a major player in the local capital markets. We'll be following the regulatory changes with interest here on Business Talk as well. Take care.
Thank you, Mark. Appreciate it.